Hi, my name's Craig Martin. Perhaps you've seen me on television or heard me on the radio before speaking about stocks and shares. Well, I'm in my home today, and what I'm going to discuss with you is a concept that is something that's dear to my heart. The theme is how the rich get richer. And that very theme implies that there's a method to getting rich. And once you know that method, you're going to continue to implement it, and that's how you get even wealthier. It's not a secret, it's nothing that's really unusual. In fact, many people are aware of it, but few actually use it. And it is really the concept of leverage, or using other people's money, OPM. Now, it's perhaps a concept that you've heard of before. There was a lot of popularity with the book Rich Dad, Poor Dad, which spoke about this concept. But how many people went out and actually bought properties and made the most of this leverage effect? In order to benefit from it, the first thing is, what I'm going to show you, you can't fear computers. You need to grab technology, and if you don't know a lot about computers or you have that fear, you need to change that mindset straight away. Otherwise, you're not really going to benefit. We're in a technology age, and that's where the opportunities lie. You also need to have some spare time, and I'm not talking about a day or two a week. I'm talking about a couple of hours, maybe 3 or 4 hours a week. Obviously, the more time you have, the more you can benefit from this. And you need to have some spare money. I'm not talking about 100,000 US dollars. If you've got 5,000 or 2,000 or even 10,000, you can do well with this. And so you've got to have some spare time, some spare cash, and you've got to grab technology by the horns. It's been proven over and over again, but as Winston Churchill said, men stumble over the truth from time to time, and some just pick themselves up and hurry off as if nothing happened. And I'm really hoping that you're not going to be one of those people, but that you're going to really see the value of this presentation. First of all, the question is, how do you access $1 million US dollars? Because obviously the more money you have, the more money you can make. Well, what if I could show you a way that you could leverage your money 500 times? So in other words, if you could access 20,000 US dollars, you could get $1 million US dollars. If you could access 10,000 US dollars, you could get 500,000 US dollars. Well, what would you do with that 500,000 or that $1 million US dollars if you were able to get it? Well, for some people, they think, well, property is the answer. So they find the right property for $1 million, put down the $20,000, and if they're fortunate enough to get a financial institution to lend them the money, they're still going to have to pay interest over a long period of time before they start really seeing good returns. Other people may have fantastic business ideas, and they're able to convince other shareholders to support them. And so they're going to have to answer to shareholders who provided the capital when they start a business. They may also have to answer to financial institutions. But what if I could show you a way where you could obtain high leverage, like I was showing you before, with little or no interest payments? You only answer to yourself. You can work from home, in your slippers if you like, or on the beach in wherever takes your fancy, the Bahamas. You're not bound, in other words, to one location. And you can achieve really significant returns. And I'm talking about serious returns. What is the answer? Maybe you've heard it before, but I'm going to share it with you. And look at this now with fresh eyes. Foreign exchange. Trading in Forex or FX as it's sometimes called. Because foreign exchange is really access to free money. Why? Because it's such a liquid market. It's one of the safest markets in trading. There's more than 4 trillion that's traded at the moment. These stats are probably a year or two old, but you can see the volume traded in foreign exchange is more than all other world markets combined. The other attractive thing about Forex is it's got flexible trading hours. So essentially, you can be trading in a currency 24 hours a day. And your currency pair, while you're in maybe in the pound, the US dollar is continuing to trade for a couple of hours after London exchange is closed. And so you're still getting movement on your investment. So your money never sleeps. That's the wonderful thing about Forex. So like me, I've traded shares for 16 years, and the comparison between stocks and Forex is quite a significant one. The first important thing is that your risk when it comes to trading shares is based on the company or the management. If your company defaults or your management has lied to you, well, your share is going to take a nosedive. Whereas in the case of Forex, it's a lot more secure because you're talking about a country and a government. And you don't necessarily want to go trading in the South African rand or in the more riskier countries and governments. you want to look at the 5 major world currencies, so you focus your trading. Whereas with stocks and shares, you've got to wade through about 45,000 listings to find the shares that you want to invest in. It's also not as liquid. In Forex, you can get out in microseconds. You can always sell short. You can leverage generally between 100 and 500 times, whereas it's not so easy to lend against shares, although there are special derivative instruments that do allow leverage. So why Forex? As I said, if you look at these first 5 here, those are the top 5 pairs which we generally trade, but you might have an appetite to even trade the Aussie or the Kiwi, which is the Australian or the New Zealand dollar. And so you've got this opportunity, and if you look at all these currencies, basically that gives you 24-hour a day trading opportunities. So let's look at Forex with slightly different eyes, because most people experience Forex when they have to travel outside their country. So let's imagine that you're like me, you're a South African, you live in South Africa and you want to travel to the USA. Now, taking the actual currency on the 27th of September, the rand was just over 12 cents. You would only get about 12 cents, 12 US cents for 1 rand at that particular time. So if you took 10,000 rand and you wanted to translate it into hard cash, you would get 1,216 US dollars. So imagine that you got on the plane with this hard cash and your credit cards, and you went to America and had a holiday of just over 2 weeks there. And during the time, you only used your credit cards. So you still had 10,000 rand when you came back, or rather 1,216 US dollars. And so when you arrived at OR Tambo, you exchanged your 1,216 US dollars, and to your surprise, you were given an extra 630 rand for doing nothing. Basically, just coming back from your holiday. Now, what if you purposely knew that the rand was likely to devalue based on charts and technical analysis, and you decided to leverage your money 500 times? How much would you have made? Obviously, a lot more than 630 rand. In fact, you would have made 315,000 rand with that kind of leverage. And so you don't need to travel to turn 10,000 rand into 315,000 rand in order to benefit from Forex moves. All you need to do is learn how to read charts, when to enter, when to exit, and you can basically trade in minutes or days. It's not very often that one would trade for 2 weeks, like in this particular example, but you can see from the chart that the rand moved in certain patterns. I appreciate you staying with me in this video so far. If you hang around, I'm going to show you how to double your money in a day, in fact less than a day, using this concept of leverage. Now, for many people, they say, oh, you can make money on Forex, but I've hurt myself on the stock market. This sounds all too good to be true. Well, I've got to teach you a little bit of the background before we actually show you a practical example. So if you stay with me, I'm going to actually show you how yesterday I was able to basically double my money. And it's not an unusual situation. It's just that we happen to be recording the video today and yesterday. So first of all, let me teach you what a pip is. Perhaps you've heard the expression. But essentially in Forex, you're looking at the 4th decimal place, depending on what currency you're trading, the yen, the 2nd decimal place. Some currencies you look at the 5th decimal place. And you actually make money off movement off that 4th decimal place, which we tend to call a pip. That's just the jargon that we use in Forex trading. And you have an option of trading a standard lot, or you can trade a mini lot or a micro lot. Each type of trade gives a different value of a pip. So let's go back a little bit. You're going to trade in volumes of a standard lot, and a standard lot means 100,000, a mini lot means 10,000, and a micro lot means 1,000. So obviously, depending on your portfolio size will depend on what sort of lot you want to trade. And if you trade a standard lot, we're talking about 10 US dollars per pip. A mini lot, you're looking at about $1 per pip, and a micro lot around 10 US cents per pip. So the pip values change also depending on the currency pair that you're trading. So we're talking here about the Euro US and the Great Britain Pound US, or the pound. So what we're going to do is, if you hang around, as I said before, we're going to look at a practical example of a trade that I did yesterday. We're going to show you with a $50,000 portfolio how to apply proper risk, what sort of reward to look for, and you're going to see how you can double your money very quickly. So hang around for that. However, before we look at this particular leverage trade, I need to go through some other fundamentals, and that is the 3 pillars of successful trading. Yes, you've probably heard this before. Some refer to it as the 3 M's, but they 3 important foundations to trading that one needs to understand. And so obviously you need a method that will identify the levels of entry and exit in terms of candlestick confirmation, as well as Fibonacci levels and various other methods. And so there's many methods that you can use. It's not key is money management. You need to be taught how much you can be prepared to risk, because trades don't always go according to plan. Sometimes you've got to then cut your losses or practice a stop loss. So you need to know, how much do I risk per trade? What's your risk to reward ratio? And generally we like to risk somewhere between 2 and 3% for a reward of somewhere between 4 and 8%. Some traders look up to 5% risk and 15% reward, which is basically a 3-to-1 risk reward ratio. Problem is, with most of the trading material and education out there, whether you browse the internet or find it somewhere else, is it only focuses on method and money. That's basically where the education stops. But really, that's just the beginning. Just like when you get married, the wedding is just the beginning. Sure, you can relate to what it takes to excel in sport. It's not enough just to simply learn the rules of a sport. You need discipline, you need training, you really need to put in the time and the effort to excel at sport. And why is it any different with trading? Many people think, okay, well, now I know the rules and I can go out and make money. The top 5% of successful sportsmen and women, they have a coach to help them. They have a mentor. They have someone to help them reach peak physical condition, to teach them the discipline. And so we've discussed 2 of the 3 pillars of successful trading. We spoke about the method, we spoke about the money management, and now there's this 3rd element which is extremely important. How important do you think method and money management are in comparison to the whole success of trading? Quite interestingly, some statistics have been done, and approximately 10% of success is related to the method that you use, 10% to practicing money management, and some surveys would vary this a little bit, but generally 80% of your success comes from this 3rd element, this very important 3rd element. What is it? Okay, well, I'm going to keep you out of your misery. The 3rd element is your mentality, your mindset, your psychology, your emotions, everything that goes into it. And only 5% traders are taught to have the right mental attitude to succeed. It's because they received mentorship. They were able to watch somebody. They didn't just go out there blindfolded and start trading. And so the reason that traders fail is because they're mentally and emotionally unfit to trade. They've never been coached or mentored or shown the correct discipline and mental attitude to trade successfully. And so for many people, they would browse the internet, or they'd attend a course, or they'd read a book on trading, and so they've learned the method and the money management skills. But this mindset comes from mentorship and support. It's not something that you can read in a textbook and then think that you have. It's something that you need coaching for, mentorship and support. So it's a difference between the theory and applying the theory. And there you need a bit of hand-holding to apply the theory. So that's really the key to successful trading: method, money management, and mindset. And then once you have that, that's the basis of your trading plan. And so you've got to have a trading plan when you go out there. And so there's that old saying, plan your trade and trade to plan. In other words, trade to the plan, stick to it. Now, coming back to this important part of having both the theory and the application of the theory, what happens if a young man comes to you and says, "Excuse me, sir, can I use your car, please?" The first thing you're going to say to him is, "Well, do you have a license?" And if he says, "Well, I've read the learner's book, so don't worry," you're going to say, "No, sorry, my friend. You need practice. You need somebody that's sat next to you and driven with you before and can see that you're capable of doing that. You're not going to just hand your car keys out." And it applies to most professions. If somebody was a surgeon and he'd studied the textbooks, he's never cut a cadaver before or witnessed any surgery, you're not going to let him cut you as the first person, is it? So it's always a balance between the theory and applying the theory. And we appreciate that in driving a car and in surgery and in just about any profession. But why then should it be any different to trading? Well, I'm going to now take you into that actual trade. So we're looking at a portfolio size of $50,000. The risk that we're prepared to take is 2%. Our reward that we want is double that. And so I'm going to trade 2 lots. Now, just taking you to the actual trade, it took place on the 23rd of October. It's not an unusual trade, it just happens to be yesterday. That's why I've got the slides for it. The trade is to short at a level that we've previously identified, which this DVD doesn't go into, but you'll learn how to identify those levels with our training, and when to exit. So you'll also learn when the exit levels are, and then to practice a stop loss. And the stop loss is simply halfway above, so we get that 1 to 2 risk reward ratio. So remember, I said to you that on a standard lot there's 100,000 volumes, so 2 standard lots is 200,000 volumes. We're looking for 4% profit. I'm looking for, in this case, a $2,000 profit, because that represents 4% of my 50,000 portfolio. If you're not with me, watch this video again and you'll pick it up, I promise you. And my stop loss is basically $500, which is only really 1% of my total portfolio, although I'm prepared to risk 2%. If it runs away with me, there's $1,000 that I can risk. Alright, so we've got 2 ways of leveraging. We can take my $2,000, leverage it up 100 times. And so if I make profit, I'm going to make $2,000 profit off my $2,000 margin, which is 100% profit off that margin, but it's still only 4% of my portfolio. Otherwise, I can work on 500% leverage, where I only have to put down $400 margin, and I can let that whole trade run against me, and I still haven't wiped my portfolio out. But if it runs successfully, I made 500% on my $400 margin. Personally, I feel more confident and emotionally stable in working on 100 times leverage than on 500 times leverage. And you'll see now when we go through the actual example. So just to take you back, we're looking at entering short. That means to sell on 160220. So the graph looks like this. Just before the trade, you can see that the pound has run up, and it's now just about at our level, and I'm looking to sell and expecting it to run down again. So what actually happened is at around about 9:41 I was able to exit that trade. So my $2,000 is in the market, I'm at my level, and now I'm waiting for the pound to the euro, to the US dollar rather, to drop. Around about 20 minutes later, we've already made $410. And so I'm going to take you through the trade in 15-minute increments. Now you see, we were up $400, now we're only up $300. Now for some people, they say, ooh, I've made my profit, it's gone up a bit, I'm scared it's going to bounce back. And this is where the mental attitude and the discipline and all the coaching is so important, because we would encourage you to hold on to your trade, wait for the levels. And so another 15-20 minutes later, and I'm getting close back to my $400. If you look at 10 to 11, I'm over $500, and now the real money starts happening. At 11 o'clock, you can see the fall is really starting to take place. $810, we made just over 40 pips, and so the trade continues. Around about 20 past 11, 620, at 11:35, $710, and now we start to retrace a little bit again. And so if you haven't learned discipline and mental fortitude, it's quite easy to get nervous when you start to see, okay, well, I've put $100 back, I've given it back to the market, and you may want to sell out. But if you were patient and hung on, which we did, you would see that the trade continued to work out in your favor. By 12:30, you were $750 again. And of course, the goal is now to double your money to get to $4,000. So we're still some time away. But at 12:50, we had broken through the $3,000 mark. And 1:05, $3,412. And you can see that she's moving down very nicely. But then she again gives back a bit some of the profits, because a trade never goes in a straight line. You're going to see a bit of consolidation now happening, and as we start approaching the end of the trade, it's been consolidating for quite some time now, and you're going to wonder, well, will it ever get to the levels that we're looking at? But this is where patience is so important in trading, because at 3:05 now in this last hour, you can see that she's really moving in our favor. By 10 to 4, I'm only waiting for basically a pip to close out, which we do. And so that's the trade, $2,000 profit in a very short period of time. And so the wonderful thing about what I've shown you today is these are trading skills that can be used for trading Forex, it can be used for trading CFDs, single stock futures, gold, oil, just about anything you want. If you can read a chart, you can use these skills to trade. And so just to remind you about the 3 pillars of success in trading, we spoke about method, we spoke about money, we spoke about mindset, and we very importantly spoke about applying the theory. And that's where we come in. We're there to handhold. If you go on one of our courses, we give you up to 18 months of mentorship, of handholding, of teaching you to basically apply the theory. And that's so extremely important. You can't just have the theory and not go any further. So I'm your mentor. We've got 7 people in our office that act as mentors in the Cape Town office. We've got Port Elizabeth office, Durban office, Joburg office. The fact is that successful people model themselves after other successful people. There's no mistake that you're going to make that we haven't already made. So why go through all of that costly exercise when you can have somebody helping you preserve your capital? A successful traders start with a mentor to teach and develop discipline, emotional and mental strength. And I can't overemphasize it. It's these 5% of people that succeed. Doesn't matter who you look at. If you look at George Soros, which is one of the greatest traders, he had a mentor. If you look at Warren Buffett, one of the greatest investors, he had a mentor in the form of Benjamin Graham. And so talking about Warren Buffett, he made a very interesting observation. He said the stock market's a funny thing because there's a buyer and a seller in every trade, and both of them think that they're making a smart move. Obviously, somebody's making a mistake. Somebody sold out too early, or they bought just before the fall. And so you need a mentor. You need someone that has made mistakes that you're likely to make. There's no mistake that you're going to make that I haven't made already with 16 years of trading. So I can save you a lot of money, and all our mentors in all our offices can save a lot of money if you just spend time with them and learn those disciplines. So it's up to you what you do with this. You can hurry off as if nothing happened, and many of you that watch this will, or you can say, here's something fantastic, here's an opportunity that I can use this knowledge and learn to acquire wisdom, because knowledge is worth nothing unless it's actually applied. And the more you put in, the more you'll get out. So if you've got the extra time, you've got extra money, and you can really practice and hone your skills and your discipline, it'll do well. And I'm sure because you've watched so far, you've ticked those boxes. You're not scared of computers, you've got some time, you've got some money. And so I urge you to go forward with this, to take your computer and turn it into an ATM, because really you can print money, as I showed you with that example. And there's another trade that we're going to look at, the Canadian dollar, right now as I'm doing this video today. Every day there's a couple of opportunities, and that's the fantastic thing about Forex, is that you can find your levels on different currencies and you can make money. So we're going to give you something for free for taking the time to watch this. If you watch this on the DVD, pop it into your computer and you'll see there's some information there, extra information on Forex, a couple of ebooks and some software that we spoke about. So load it up on your computer, and hopefully we'll see you on the course and look forward to mentoring you. If you've watched this on the website, then follow the link below for some of these free goodies. But thank you very much for investing the time today.